Hey everyone, quick sound check. And then we can get started. Okay, sound seems to be good on my side. Just a quick general advice and risk warning disclaimer. Note that any advice given is deemed to be of general advice, as the information or advice given does not take into account any particular objectives, financial situation, or needs. Therefore, at all times, you should consider the appropriateness of the advice before you act further. CFD and Forex are leveraged products that carry a high level of risk and are not suitable for everyone. You can lose more than your initial deposit, so you should ensure CFD and Forex trading meets your investment objectives. Strategies and charts used in this presentation are for example only. You are reminded that past performance is not indicative of future performance. Also, to add here, we don't offer any fund management services, paid signal services, or paid education or whatever, not using the likeness of Octa FX or me. So if that happens to you guys, just be mindful of that we are not offering those kind of services. Okay, so I'm gonna jump straight into the chart, and we are live. Okay, so it's been it's either gonna be a very devastating week or it's gonna be a week you celebrate. I don't know, depending on the situation, but I would assume most of you guys in here are probably celebrating by what the icons are saying there. We've got poppers and whatever not. Okay, so a few case studies today. We are probably going to take a look at the dollar yen, the euro yen, sterling yen. In the calendars for tonight, a couple of balance US balance of trades is going to be out in about 28 minutes. But the key things tonight is going to be the Bank of Canada interest rate decision. That would be in 2 hours time. So those are going to be your key fundamentals. In terms of, from Bank of England, we've got the monetary policy report hearings. There are a few talks about, how the new UK Prime Minister, I believe her name was Elizabeth Liss, if I'm not wrong. But I need to double check on that. But she's currently planning to help out with the energy crisis there by giving out help, I guess, handouts. We used to get that when we were in Australia. New Prime Minister, we got new handouts and whatever not. That's going to probably prop the energy issues temporarily. I think that's not going to be the main issue this week. The main issue this week is obviously going to be the ECB, and then what the Eurozone is going to be planning for their backup energy plans. Right? Okay, so jumping straight in, first things first, let me just jump straight into the dollar yen first. I know a lot of you are probably having this position right now. The question that you're having right now is either to get in or to get out. By the way, I know someone here got in at 132 and maintained the position towards 142. So congrats to that person. I just kind of forgot who it is, but I think everyone else just kind of have done this in two batches, like so. Right now, if you're still holding dollar yen, should you be getting out? That would be the biggest question right now. There are signs. I mean, the initial target is only at 142, so you should be getting out. Either that or you started locking in your stop losses for profits and letting the rest run. So question is, should you stay or should you go on the dollar yen? Just be mindful on the dollar yen. Since situations like this before, just want to take everyone back a little bit. So let the euphoria die down a little bit. Taking a look at the daily, we have reached 161.8% on the Fibonacci extension. That is basically at 144.95. That's literally 145. We did touch. Did we touch? No, we haven't touched 145. But that's going to be the key barriers for the dollar yen. The daily is not going to show you any weakness yet because it hasn't tracked anything or any changes yet. The hourly, we are looking at a little bit of a slowdown on the around the 161.8% at, let me just switch to a different chart here. All right, some of you are probably going to be asking these questions, right? So either you've done this in batches. We talk about the ascending triangle, whatever not, targeting 142. Some of you stay in that trade. Some of you go at 142 and probably jump back in again. I actually did the later. I actually jumped back in again at the 143 break, but I'm all out on the dollar yen. I think it's logical to kind of get out on the whole situation. Just don't get too greedy on this one. So this is where your logic comes into play. Right now, we are looking at a market that has kind of overextended stay here. We are looking at key resistance at 145. That would be just slightly above the 161.8% on the daily. So we are keeping an eye out on the 145. If there's a break above 145, then yeah, potentially we could be looking for further gains on the dollar yen. But right now we are looking at 145. We're the stochastics is not really showing signs of potential divergences yet, but I'm pretty sure if I bring out RSI, it is going to show that. All right, so we've got RSI. So it's kind of showing you that the market is actually creating what do you call it? The oscillator is creating a lower highs. Market's creating a higher high. So there is actually a slight divergence, but in the past hour, the market is actually a little bit flat. So it is still lower than the previous high at least on the hourly time frame. But it's starting to flatten out, right? So could we consider this as potential for any regular bearish divergence signs? Yeah. If you want to use it to get out of your position, yes. If you are planning to short the dollar yen, I wouldn't do that. Dollar's king right now, so we're not going to take any chance on that. So I'm definitely not going to be shorting the dollar yen. Might be looking for opportunities on any pullbacks here, but in all honesty, all out on the dollar yen. All the swing trades that we talked about since August, that's all out. That's all done and over with. So for those that are still staying in the dollar yen trade, you might want to move your stop losses a little bit higher, maybe towards 143.75 if you still want to stay. That's basically slightly lower than the current low before the run just now today. So we are looking at that low, anticipating, if you got any positions, you want to probably lock it in towards 143.75, 143.50. Choice is yours if you still want to stay in the trade. But I mean, if you are, even if you got in at 143, right, that's close to 200 pips off on your side. So I would be more on the celebrating side tonight. If you guys are done with the dollar yen, I would say don't get too greedy on any trades. Dollar yen, sterling yen, euro yen. Biggest gainer of the week is actually sterling yen. I think we saw about 280 pips in one day. So yeah, we are going to take a look at sterling yen. There was actually a request here from Alana about the sterling yen. If there was a breakout like the sterling yen 2 days ago in the daily chart, it's safe to enter immediately or wait for the pullback depending on the situation. But yes, it's always safer to wait for a pullback. But again, depending on the situation, depending on how the market is trending, as I previously mentioned in the past few weeks, if the dollar yen breaks, it's going to create a spillover effect into the euro yen, the sterling yen, and everything else pretty much. The Aussie yen, it's one that I'm a little bit more cautious on the Aussie yen. I think I posted this on the Telegram channel yesterday. Yesterday we were looking for resistance at 96. If it breaks, then yeah, we might see a potential run. But it is still capped by 97 at point of doing this. So yeah, biggest gainers obviously going to be the dollar yen, sterling yen, and the euro yen. We will take a look at the dollar CAD in a minute. I just want to talk you through on the dollar yen here, because this is actually a great example here. I believe this was from last week's session that we took this, and this was on Monday's session. But there are a couple of breakouts. We've basically got two ascending triangles, right? We've got one ascending triangle, we've got two ascending triangles. So let me just label it. So that's one, that's two. So, you know, it's really hard for you to actually miss out on this trade if you're doing, you know, you're not countering the trend or anything like that, and you're doing things patiently. Shouldn't be an issue with the dollar yen. We've got a little bit of a flag here, really thin flags there. We've got another flags over here. We've got another third flag over there. So depending on your choices, I wouldn't consider the second one a flag. It's really more of a symmetrical triangle there. But there are a couple of flags in the market that could give you several entries beyond that ascending triangle. So if you got out from 142, there are a couple of entry here that you could jump in, right? You could jump in around 142.75. I got in 143 because I was waiting for this high to be broken. Let me just show that, which is there. Waiting for that high to be broken, and then the market came back to test it. So let me zoom in. So in a situation when there's a breakout, ideally you want to look for that previous cap in the market and then wait for the market to actually come back and retest it. That's going to be much better than jumping in at a higher price level, right? So either you jump in there, all right, with a stop loss like so, or you jump in at the pullback around there, and you basically minimize your stop loss by a bit. But yeah, it's always ideal to wait for a pullback. A proper breakout is normally followed by a pullback in the market. So case like dollar yen, it's a strong trend in the market, so we were looking for that pullbacks. This one here, no pullbacks, but then again, we do have a support trend line pushing it up. So yeah, a couple of choices in how you look at it. But yeah, I mean, if you do get that break, I got in 143 again after I got out at 142. But yeah, it's okay missing out 100 pips, but for safety's sake, you know, I took what I trade, right? So looking at the situation, you know, the whole trend, the whole sentiment, you know, looking at the break on the dollar yen there, I was actually aiming for the 142.50 as potential resistance this week. It broke through that easily, so we kind of noticed the trend is actually really strong on the dollar yen. So yeah, a couple of entries there. So again, you know, I'm not going to be looking at this one. You know, the past 3 hours, I think a lot of people probably missed this breakout. This one is going to be hard to trade. You might be able to see something on the 15-minute time frame where market actually came back to test that resistance. But again, not everyone trades on the 15-minute time frame. This is not identifiable for an entry on the 1 hour time frame. So I think a lot of you probably got in again yesterday at 143. But yeah. So for those that got in at 143, the question right now is, should you get out? You know, I would say walk away with that 200 pips. It's in there. Might as well just walk away with it, rather than, you know, hoping market goes up for another 5-10 pips. You know, I don't think it's really worth it. So for that, someone that actually took the trade with me when it was at 132 and stayed on, I got out halfway through and came back in. Someone actually stayed on. I know that because that was us in the webinar about 3 weeks ago, I believe. So yeah, should be happy. You should be out from the trade. So that's like a huge 10 cents for you. Okay, that's the dollar yen. Taking a look at some of the case studies here for potential. Should you wait for a pullback on a breakout? Ideally, yes. You need to consider the market conditions as well. If you're waiting for that pullback to happen, is it going to happen? Some of the key resistances, is it going to eventuate? Okay. Next up, let's take a look at the Euro USD, because I think a lot of people are going to be asking this question right now, especially ahead of the ECB tomorrow. So with the Euro USD, we were kind of looking at the potential break. Yes, we've got that. We've got 99 cents there as potential support. We've broken that. Next up, we've got 98.50. Worst case scenario, we were looking at 97 this week, and that's going to be the main focus on the Euro USD. If the ECB fails to answer the question correctly tomorrow, which is going to be really, really tough, right? The questions that they're going to be asked is, it's not a matter of 50 basis points or 75 basis points, because in all honesty, if they do that, it's just going to create a temporary buffer, but it's not really going to save the euro from the US dollar, right? I think the plan right now is, if the ECB can actually work out how to tackle the, how to handle the higher yields, that's one. Number two, how they're going to cooperate with European Governing Council on the whole energy crisis, right? How they're going to help out, that's key. But the biggest questions tomorrow, it's not whether or not they hike, as I mentioned before. It's actually the press conference. They're going to be asked this question: are they going to continue hiking? Do they intend to continue hiking? If they do, what's that transmission program? Something. We talked about this on Monday anyway. I believe it was TPI or something. How are they going to implement that? Because they're not really clear on that. Okay, so the Euro USD, in terms of the whole trend and stuff like that, we have broken key resistances. We are trading below 99. But again, this is today. We haven't seen a daily close below 99 cents, right? This is just today's price movement. The stochastics does point back towards below 20. Right, so is it an indication that we could be looking at potential weaknesses on the Euro USD? That's going to be really tough, especially if we've got ECB tomorrow. 99 cents, we've broke 99 cents. The question is, should you be staying in this trade or should you get out, right? There's actually a small fibs on this one here, which is this. Might give you a little bit of a clue on where it kind of overlaps. It's basically overlapping around 98.50. So we're going to highlight 98.50, which is at that 127.2% on the daily. So keep a close eye out on 98.50 if you're going to be looking at this on the hourly time frame. We are looking at further potential push today. I don't think we're quite done today on this one here. So it might extend a little bit towards 98.75, 98.50. We are going to be looking at that for potential support. So if you're short on the Euro USD, you should be locking in your you should be adjusting your stop losses right now to the current swing high on the hourly time frame. If you're trading intraday, if you're trading swing, then your stop losses would still be at parity or at 1.01. So it shouldn't be a concern to you. Okay. So if you got short position on Euro USD, should you be getting out? You could. Feel free. It's not going to be a huge difference anyway to support level, because if you're looking at where the current low was, that's basically at 98.75. I'm thinking that's pretty much done. Towards 98.50, that's just 22 pips. Really worth it? Probably not. So it's okay to stay tonight, but I don't think this should be a trade that should be carried on to the next day without a proper stop loss. If you do have your stop loss at around 99.30, 99.40, that's not going to last you tomorrow. That's only going to work for in an intraday trade. If you are planning to trade this until tomorrow, then your stop losses are going to be at parity or even at 1.01. So that's far away right now. If you're planning to go in for a short right now, you might be a little bit too late. If you take a look at the swing positions here, is it late? Yeah, if you want to have that swing stop loss at 1.01 or at parity, it is a little bit too late. Again, on the question on the potential breakout, do we have a breakout and a retest on that? Yes, we do. So if you're on a swing, I would say, you know what, probably hold it until 98.50. If you're trading on the hourly time frame, you want to go short, just keep in mind your stop losses are going to be at the minimum is going to be at around 99.40 in terms of stop losses. In terms of target, you're going to be looking at around 98.50. Risk reward ratio is not going to be 1-to-1, so I don't think it's great for you to jump in right now. if you have a position on the Euro USD and you're thinking, should you stay or should you go on this one, it's completely up to you. The difference, again, as I mentioned, is only going to be like 22 pips. So is it worth it? Probably not. All right, but that's my thought on this one. But someone was asking about the Euro USD. So yeah, don't overstay. That's all I can say. Because if we do anticipate a potential stop on the dollar yen, then we might see a potential bounce on the Euro USD. So yeah, keep that in mind. Okay, so is it worth it to kind of stay in? No, not really. So if you do have a short position on this one, there's a lot of uncertainty going on. Either you are going to get, either your short's going to be super great, or we're going to be looking at a potential real quick bounce back to parity by the time ECB rolls in tomorrow. So it's a different situation than what we were in maybe 2 weeks ago or 3 weeks ago. Right now, I don't think it's a great time to be going short. Is it time to go long euro? I don't think it's time to go long euro either. The key point is this: do not go against the US dollar at this point in time. I know there's a little bit of a fatigue in the market. I think there's a lot of contrarian traders jumping in right now, attempting to reverse whatever the market is doing right now. I think it's a little bit too early. We're not looking at that indication. We don't have any divergences on the daily time frame for the Euro USD. So yeah, don't rush in. FOMC is gonna hike this month, right? So that's that. Nothing is probably gonna change that. Throughout the whole month. But we're just not in a position right now to, go against the US dollar. I think there's a lot of risk attached to it. So if you are, following signals or listening to other traders, don't just, as I always say, don't just blindly follow them. You kind of need to know the whole market condition or the whole situation. We talk about this on the Friday's webinar session. If you've been missing out, it's time to jump in and start following through. We did some practicals last Friday, and then that was on the whole market condition there, and then we talk about patterns, easy stuff like that could actually be useful, and that's actually being used right now by traders in the market. We are going to be talking about divergence on Friday, so just be prepared for that. I'm sorry because I'm new. So you think final done on 98.50 and after that slowly climbing? No, it's not final. Right now, in terms of finality on how far the Euro USD can go, as I said, this could actually go to 97. I'm just saying right now in the near term we are looking at 98.50. So might see a little bit of a bit around 98.50. We might see buyers come back in a little bit around 98.50. We might see sellers take their profits. Then if they sell, then obviously they need to buy back in, right? So kind of expecting a potential support to come in at around 98.50. But in terms of how far down the Euro USD could go, it could go all the way down to 97. It's just that we're not looking at that indication right now. If there's no ECB tomorrow, I would probably say, just go short. But we do have that ECB tomorrow, so I think that's a key event in the market. I think there's a lot of questions in the market right now about what ECB is going to be doing, right? Fundamentally, economically, the Eurozone is in a different league than the US or the UK. They've got a little bit more severe gas crisis over there. But again, the biggest question is this: can ECB do that interest rate hike? Can they do it continuously without crashing the economy? That's something that they need to look into. Do keep in mind the ECB was dovish up until about 2 months ago, right? So this is new for the ECB. I think they're hiking because they need to, because the inflation just went a lot higher than what they expected, but I think there's a lot of question marks. It's not like the FOMC. It's not like the FOMC in the sense that we have seen the FOMC hike. We have seen FOMC saw that weaker CPI numbers and say like, hey, we are here to maintain price stability. We're not here to save the economy from crashing. We're not here to save the economy from a recession, so we're gonna continue hiking interest rates. See, that's the signal, that's the message that's different. Well, the ECB hasn't done that yet. The Bank of England has done that. The RBA has done that. But take a look at the example for the RBA. The RBA, for those that you know, they just hiked 50 basis points yesterday. Didn't do much damage, right? I didn't even post it out on the Telegram channel. It's just like a blip. It's a small blip in the market. If RBA, right? I mean, I'm from Australia, so I know how they work over there. To me, they're all talks. That's my opinion, right? RBA is like, hey, we are gonna be hiking 50 basis points, and we're gonna continue hiking hiking interest rates. But here's the thing: there's always a but to it, right? The but is we just don't know what the future schedule is on the interest rate hike. So they're taking a page out of the Bank of England right now. So they're being very coy on this one here, right? It's not like the FOMC. They say like, hey, we're gonna be hiking, interest rate. We're gonna warn you, it's gonna be unusually high. So that they give out a warning and stuff like that, and they kind of give out a timeline. The RBA doesn't do that, so it doesn't really create anything in the market. Logically speaking, if they hike by 50 basis points, the UK hike by 50 basis points and stuff like that, they should be able to maintain that pace with the US, right? We should be looking at the Aussie USD and the Pound USD being strong together with the US. We're not looking at that scenario right now. I think globally, people are more focused on the FOMC. Some specific groups are focused on the RBA. Some of them, like me, probably be looking at the Bank of England for any comments and stuff like that. But again, look, whatever they do is going to be a blip in the market. So the potential outcome of tomorrow's ECB number, even if they hike by 75 basis points, it might support the Euro USD temporarily, but it's not going to be a long-lasting permanent fix on the Euro USD. So that's where my concern comes in for tomorrow, right? If they do hike by 75 basis points and they're hawkish and whatever, we might see price bounce back up towards parity. But then, if we kind of scale out a little bit, let me bring out this. So, if we take a look at the whole weekly price on the Euro USD here, it only tested parity once, right? It hasn't really tested anything other than that. So, could we see market pull back up a little bit right now around 98.50? We could, right? We can see price push back up towards 99.50, maybe do this and then slowly climb back up and then do that all the way up, nearly close to 1, and then it might shot back down. That's the thing with the whole situation with the Euro USD. There's a lot of unknown with this one. And again, it's hard to deal with parity level because there's always that sense of attachment that, hey, we are at parity. By the way, there was a question just now asking if the US is the strongest currency right now. I would probably say no. I mean, the Pound USD is still above parity. It's still stronger than the US dollar right now. But in terms of strength this week, yeah, I think the gainers are in with the US dollar. All right. By the way, this session is going to be in English. Any questions, do ask in English because I don't understand Hindi or whatever. Okay. So yeah, your use is going to be a little bit unique. So I'm not saying the final number is going to be at 98.50. We are actually looking at 97. The thing is, how soon does it get to 97? Right, that's the thing that we don't know because we've got ECB tomorrow. That's going to be throwing a lot of more random questions out there. Okay. By the way, with the whole dollar situation right now, let me bring you up to speed on the dollar index here. We are looking at a very close. Sorry, we have actually touched 127.2. So we are actually looking at a little bit of a resistance coming in at 110.50. The resistance area is actually going to be at 110 to 110.50. That's around there. If it stays there and it fails to go above that level there on the dollar index, that's where the dollar might fail, and that's why I say look out with watch out for 145 on the dollar yen, because if it does break 145, then the dollar index is likely going to go above 11050. So yeah, that kind of goes hand in hand. If the dollar index goes above 11050, there is a potential scenario on the Euro USD where the Euro USD could actually break below 98 cents. So keep that in mind. If you're not watching the dollar index, I think you should be. But yeah. Okay, so let me go through the questions. We've got Canadian numbers just now out. Let's just jump into dollar Canadian right now. See if there's any major movement on the dollar Canadian. I'm not looking at anything on the dollar Canadian. New levels. Should we bring in new levels for the dollar Canadian? We are looking at pivots. I would like to leave 1.2975. That's much more important than 1.3. Okay. Dollar Canadian. Do we see further strength on dollar Canadian? I think we are. I mean, if we go by this, we're probably going to be looking at about 1.32. Well, it's pretty much resistance 1 on the weekly time frame, but let's talk in 132. That's going to be your key level for the dollar Canadian to watch out for. Momentum wise, I'm pretty okay. This one stays above 80. No signs of any divergences or anything like that. So let's just jump onto the hourly time frame. See if there's anything. So yeah, we're seeing a little bit of a range on the dollar Canadian on the hourly time frame. Someone asked for the dollar Canadian just now, so maybe it's time to look at the dollar Canadian. Is it forming something? It actually does. It's not really an ascending triangle or anything like that. This is more of a range bound market condition. But two takes on this one. So either you could do that, right? Take that as your support level, or take in a more of a flat support line. Would go for 1.31 to 1.3075 as your immediate support for dollar Canadian. So yeah, should you be going short dollar Canadian? No, don't really want to go short against dollar or anything right now, as I've been mentioning for the past few months maybe. Anyway, here's the current situation. If it does break above 1.32, then yeah, you might be able to take in a little bit of a quick long on the dollar Canadian. Just be mindful on that interest rate hikes that's going to happen in an hour and a half. Again, Bank of Canada is expecting to hike by 75 basis points, but the current progression is that we are probably going to be looking at this extension here, limiting yourself around 1.3250. Okay. So if you do have a long position on the dollar Canadian, yeah, I'm not really too concerned. Should you get out? Probably not. You might scale out a little bit at 1.32, but ultimately you are going to be looking at 1.3250 and potentially even 1.33. But here's the current scenario here. If you do plan to go long at 1.32, you're looking at about 1-to-1 risk-reward ratio. So keep that in mind if you are going to be jumping in on the dollar Canadian. Is it worth it? Dollar Canadian is never my taste. I just don't like the range on the dollar Canadian. Alright, someone asked about the Australian fundamentals today and its impact on the Australian dollar this week. Let's jump in onto the Australian dollar here. In terms of impact, again, here's the thing. There's one. Let me zoom out a little bit. Let me just highlight this. We are actually looking at this Fibonacci for those that's asking where we are right now. We are looking at 161.8 in terms of a floor on this one. We are at that floor right now at 67, right? We break 67 on the daily, then we are probably going to transgress lower. It's just that on the daily right now, we have to look at this fib here. We are at its limit. We are at a 67, which is the July low. So might be a bit mindful on where the current situation is. If you do have a short position on the Aussie USD, I say it's not just the dollar yen, right? The Aussie USD is showing signs of exhaustion here. Q for a potential market correction. I'm not saying that 67 is going to last forever, but if there's a bounce today, then yeah, we could see market try to pull back towards 69 on the Aussie. Fundamentals doesn't really play much right now because we've got the RBA yesterday. It doesn't really dent the market or anything like that. In fact, we see the market just kind of, yeah, you know what, no one cares. All right. 67 below 67, obviously we've got 66. Just looking at the whole situation here, we do see that quick cross on the stochastics here, but be mindful, we are at July low. We are also at psychological price level. There's going to be a trigger for this one. It's actually going to be at 66.75. If price touches 66.75, the higher probability is this. Market is just going to slide down to 66, but the trigger is going to be at 75. If it's, if market does touch that 66.75, that's basically where most of the stop losses at 67 is going to be placed at. If that stop loss get triggered, then yeah, we're probably going to be looking at a potential slide towards 66. But right now, we're looking at 67 as a potential support. I'm not saying go long Aussie USD right now. That's just crazy. Even if it does pull all the way back up to 66.69, I probably wouldn't go long until there's an hourly break above the Ichimoku cloud. But that's my condition on going for that correction. We're just not looking at the correction right now, especially not this week. The whole momentum is still strong to the downside. I'm not able to identify. Oh yeah, this is a new low. I'm predicting a bounce from 67. Don't do that. That's just ridiculous. We do have that range all the way down until 66.75. If price touches 66.75, we could potentially see a slide towards 66. Until that happens, nothing much to do with the Aussie USD. So yeah, just be careful with the Aussie USD. If you're going short on the Aussie USD, you might want to start moving your stop losses. You could start moving your stop losses down to about 67.25, 67.30 if you want to. That's really pushing it. I would probably say around 67.50 is probably going to be the best level there. That's just slightly off the current hourly swing, because the hourly swing right now doesn't mean anything, because if you take a look at the Aussie USD on the hourly time frame, if I zoom in, you're going to be trading on this fib, right? So you see where the 161.8 is. Price could just bounce off. Stochastic goes down, it could just bounce off this and do that. How far can it go? It could go 66.75 and then it might bounce back up. So just be mindful on this one. It's kind of pushing it, right? We have seen a huge run for the Aussie USD. If we take a look at the pivots here, where the support to is, that's basically just right around 66.75. That push towards 66, that's beyond calculation, at least not on an intraday scale. Even on the swing, we kind of look at 67 as a key level here. That's basically this the July low on the Aussie USD. Okay, so be mindful. So we did take a look at the dollar CAD. Tomorrow we got Jay Powell's speech. What do you think he'll tell us? Nothing new on Jay Powell. Again, I believe it's within an hour from the ECB, right? I think it kind of overlaps. I think the ECB press conference goes on, and I think Jerome Powell is scheduled to speak, yeah? So I don't think there's anything new coming out from that. We've got Jackson Hole. A lot hinges on that. That was basically the key event highlights for the FOMC annually. So I think we do have a little bit of a guidance on that one. Okay, any potential for Euro Pound to go to, let me just remove, 87.25 on the Euro Pound. Do we see that potential? I think we do. Need to keep an eye out on 86, yeah? Just need to keep an eye out on 86. If there's a daily break below 86, then yeah, you might want to change that perspective. But right now, if we take a look at the whole thing, we need a daily close like this today, right? Because if we take this as, you know, I don't. It could be a flag, right? It's why 1, 2, 3, 4. It's completely fine if we see this as a potential breakout. That's fine too. In terms of daily resistances, do we see 87.25? That's basically resistance 1 on the weekly. Do we see any potential to go all the way there? Daily suggests so, but make sure it doesn't fall back below 86, because if it does fall below 86, then it might change things. So as long as it stays above 86, I think that's an okay view on this one here. In terms of the hourly perspective, let me just get rid of this because we don't need that. Right, so the weekly pivot, we just bounced off that. Is there any chance of this one getting towards 87.25? You might see a little bit of a pullback, maybe towards 86.50, 86.25, but you know, that's something you can box in. So about there to right around there. Right, so we might see price pull back down a little bit. We might, right? If it bounces off 86.25, then yeah, it could go all the way up towards 87.25. But is it gonna go there straight away? It could. It'll be this fib that's gonna dictate it, but again, it's a bit far off. Yeah. Does this match on the daily? It's a little bit too small on the daily time frame. So yeah, this is an hourly one. So if you want to go by this fib, you could. We just break above 61.8, currently still testing 78.6%. Might see price pull back down towards 50% before it potentially bounce back up. So be mindful on the whole situation with the euro pound. You know, the euro, it's a little bit unique. It's like skating on thin ice right now with the euro. So if you do have a euro pound position, that's okay as long as you got your stop losses. As long as it doesn't close back below 86, that's completely fine. Next up is Euro Yen. I need to be aware with the whole Euro Yen stuff here. Let me just get rid of that. That's a lot of lines. We broke through a lot of stuff. Okay, we got key resistance coming in at 144. That's basically very, very close right now. Maybe another 75 pips to go on the Euro Yen, but 144, that's going to be your key level on the Euro Yen. If you do have that long position on the Euro Yen, yeah, it is at 143 right now. You know, I think you should be out because some of the triggers is at 140, 140, 50, 141. This is something that we talked about on last week and Monday as well. So if you are in that long on the Euro Yen, it's most of these currencies that has actually gone through these breakouts. It's currently approaching key resistances or key support levels. That's basically my caution right now. Don't get too greedy. I know a lot of you are celebrating this week. A lot of you are in pain too. I know, because if you if you go against the trend on the market, then it's a lot of pain. I can understand that. But for those that follows the trend and think that, hey, there was a breakout yesterday. I got out too early. The market goes on for another 100, 200 pips. Put it simply, it's a bonus if you get that extra. But if you stick to your original trading plan, you should be out of your positions right now. For the Euro Yen, the key resistance to watch out for is actually 143.50 to 144. It might fail. So let me just caution you on that one. The stochastic is already flat, right? If we kind of watch what the stochastic is actually doing, a lot of you are going to be familiar with this, right? It's actually not moving in any clear direction. Is actually choppy on the stochastic. So maybe a clear indication for you guys that, hey, you know what? Something is quite wrong on price here. It is quickly approaching potential key resistances. 144, if you want to know what it is, that was basically the high on May and June. High on May and June. Okay, so it does carry a lot of significance right now. So yeah, I mean, if you go by, the hourly time frame, if you go by the fibs and whatever, it should be out at 142. Again, this is at 143. That's an extra 100 pips for you. Good for you if you do that, but don't overstay. That's basically it. So the euro is unique. Really don't want to skate around with the ECB tomorrow, because tomorrow, whatever the ECB is going to say, it's going to be completely new. It could really change the whole dynamic in the market. But again, I'm not really expecting much from the ECB. But hey, there's always the we always think about the worst possible case, worst case scenario, right? The ECB could be really hawkish. They might follow suit in saying what the Fed has been saying. They don't care if the the economy goes into a recession. They could say that, right? I don't think they're going to say that, because again, the Eurozone is unique. We're not dealing with one single economy here. We're looking at patches here and there. So yeah, tomorrow is actually going to be a whole new thing. What I'm trying to say is, today is Wednesday. If you got in a trade from 3 weeks ago, 1 month ago, 2 weeks ago, you should be out. You should be enjoying that trade right now. Maybe chill out a little bit, let this week settle in. There's a lot of volatility early in the week. Typically, if we have a quick breakout early in the week, the range is huge, right? I mean, if we take a look at the whole range on the euro yen, for example, let's take a look at the weekly range on the euro yen. So Wednesday, so yeah, pretty much from there, it's just 3 small bars to you. That it's actually about close to 500 pips in terms of movement. It's huge. It's like super huge. So what I'm trying to say is this: if early in the week it created a range like that, then for the rest of the week, even if it does reverse down, it could reverse back painfully. You could be down like 250 pips, 300 pips easy, and then the market could stay like that. Is it worth it? Probably not. I mean, just stick with the trading plan. Don't overstay. That's what I'm trying to say. Just don't overstay. The range is huge. I'm not kidding. In terms of resistances, we've got this high here, 144 May and June high on the euro yen. So don't overstay on this one. In a bearish situation, the market moved up, halted around resistance, but stochastic still below 80. In this case, when is the best time to open short position? Should I wait till the stochastics turn down? The market moved out and halted around resistance, but stock still below 80. In this case, when is the best time to open short position? Should I wait until the stock turns down? If you want to go by stochastics, yes. But again, remember, stochastics is there to help you out. But I mean, if it confuses you, that's why I use the dollar yen as a key example here, because we don't actually need stochastics to do that, right? If you wait for the stochastics, nothing is going to happen, because if you take a look at the stochastics here, if you trade this breakout over there, stochastic is still pointing down. But if you don't jump in, you're late on that trade. Simple as that, right? This one here, we've got the ascending triangle on the breakout here. We got stochastics crossing up. That's good. That's a great indication that that helps out. The first ascending triangle, when it breaks above that level, the stochastic was actually somewhere there. It was actually crossing down. So, point is, I don't go by entries on the stochastic. Stochastic doesn't reflect price. So depending on how strong that trend is, in a strong trending market like this one, again, the RSI is a good choice. It probably give you a much better scenario. Let's refresh that again. There was an article on the RSI that should be posted in Bahasa and in English. But if you guys missed out on the whole deal with stochastics, in a trending market to the upside, we are looking at 40 as a key support on the RSI. So if it stays above 40 level, then the uptrend is going to continue. That's basically it, right? So the current scenario is, should you be keeping an eye out on stochastics, or should you be focused on price breakouts? I'm more vocal on price breakouts, especially in the trending market. Remember, stochastic it's a lagging indicator. It's an average of price. We use that to actually identify potential divergences. That's the main use for stochastics. That's kind of our radar. Hey, something is wrong here, right? What the market is doing right now. Something is wrong here. Market's creating a higher high. Stochastic starts to create a lower high, but it's not really a proper cycle. The RSI does indicate that. Okay. All right, Aussie USD. We've done Aussie USD. So Imam, hopefully this helps you out. I mean, go with how you actually plan your entry on your trades, right? Because there's going to be a lot of scenario on this one here. You could be basing your entry on FIBs. You could be basing your entries on price breakouts. So you could be trading in range. You could be trading US session breakout. You could be trading UK breakout. So you could be using stochastics or RSI for a potential entry. Again, stick with the entry. If you're using moving averages, stick with it. Right, simple as that. If it starts to confuse you, get rid of it. Simple. It's kind of simple. Just be logical. I think that's the key thing. Just be logical. We know the FOMC is going to be hiking interest rate, and then we go against the US dollar. That's kind of illogical, and that's what I've been trying to say for the past month. But hey, I'm not here for everyone, right? Intraday traders, scalpers are going to hate what I'm saying right now. But again, everyone has their choice, right? Even if you're scalping, you could be scalping with the trend instead of going against the trend. That's kind of the logic there. Okay, do I think Bank of Japan intervention on Japanese yen will change Japanese yen weak flow, right? Or the flow? I don't think there's going to be an intervention, I'll be honest with you. Because there's this thought, if they do intervene, it's going to cost a lot of money, right? They could make the situation worse, right? If they do intervene, it's actually, again, like what I've been saying with how the RBA and the ECB, they've been hiking rates, Bank of England hiking rates, it does nothing in the market. It could just be a blip. It might, buffer the yen for maybe a week, but it's not going to stop anything in the long run. So the thought on Bank of Japan intervening in the market, it's going to be one that's actually very expensive. So yeah. Japan is probably going to be thinking that really, really carefully, because that money could go. It's a lot of other places. They do, they show concern. They need to be concerned about how the current yen it's getting smashed like that. But it's they're saying they're keeping a close eye on that. Hey, they've been saying that for the past I don't know how many years, right? In terms of the dollar yen, this is actually 1998 low, I believe, where we are right now, but I haven't checked, but I'm pretty sure it was actually 1998 low. Yeah, curious market stocks at 2003. But yeah, we are at around 1998 low on the dollar yen. If they want to intervene, they would have intervened around 142, 143. So maybe they're going to be saying, hey, yeah, we're keeping an eye on 145. If it breaks above 145, we'll intervene. Then they're probably just going to move it to 150, make it easy. All right. Sorry, I'm just catching up on the chat here. Oh, wow. It's nearly time. All right, so just to wrap things up, we'll take a look at oil. We'll take a look at coins. I'll take a look at indices. I promised you guys that before we broke off for tonight. Someone asked about the pound USD. I think this is overextended again for pound USD. The projected target, if you've been following the webinars, the projected target was at 1.14. No, it's actually 1.1430. We have broken off below 1.1430 right now. So yeah, this is currently beyond projection. This was what we were kind of projecting. So sideways a little bit of a pullback. Yes, that's completely fine. On the hourly time frame on the pound USD, if you do want to go short on the pound USD, this one gets a little bit tricky. The pound is in a different situation. We've got the Bank of England monetary policy hearing. So yeah, we've got that hearing today. Nothing new added to it. Some plans on the new prime minister in terms of helping out with the whole energy crisis. But sterling, it's probably the craziest thing. It's so painful to watch sterling right now, but there is this level here right now, which is the pandemic low, that you need to keep an eye out for. That's basically that. Okay, so let me go back to daily. Sorry, let me just switch here. There we go. We've got the hourly time frame, nice and easy here. We've got this fib here on the hourly time frame. Something happened on my connection. I'm still going on my side. Did we get caught up? Okay, guys, any issues with the connections? How long have I been out? It should be short, yeah? Where did we get cut off at? Okay, anyway, should we go back on pound USD cable? So here's your hourly fibs. We are pretty much very close to target as well for the hourly time frame. Basically looking at 161.8 again. Oh, it was for a while. Okay, no worries. Good. So yeah, for pound USD, I would say watch out for 1.14. That's a whole psychological level below 1.15. That's simple as that. But just keep an eye out on 1.14. Because if you take a look at the hourly time frame, take a look at the daily time frame, that's kind of the limit right now on the pound USD. So this is on the hourly time frame. 161.8% is at 1.1406. You guys should be happy with that one. If you jump in on that 23.6% break, which is this short here today, if you guys did that, you guys should be really happy right now, right? But yeah, if you're aiming for your exit, you can keep an eye out on closer to 1.14. But in terms of risk reward ratio, it's crazy. On the daily time frame, on the break on that bearish flag there, which a lot of you jump in. I know a lot of you jump in from 2 weeks ago or so. It's time to get out. It's a huge run. There's only 1 day of a down day on this one here, but it's been a huge run. Most of you probably jump in there. Yeah, that's 300 pips for you. What more do you want? But if you're planning on going long pound USD, again, I don't want to go against the US dollar. Simple as that. So yeah, a little bit too late to jump in on short on a pound USD. Feel it? I'm planning that out. I've got I've this week has been a great week for me, so I freed up a lot of my schedule. So I'll let you guys know on the Telegram channel when we're going to be doing that. Okay, next up, let's quickly take a look at oil. Which template was that we take a look at oil? No, not this one. Is it this one? Yeah, I think it's this one here. Okay, oil. No, it wasn't this one. Because there was a floor on oil. There we go. Right. A little bit of a floor on oil. We've got, between 85, hovering around 83. We kind of projected this. I don't remember if I show you guys the XABCD patterns here on this one here. We've got a bearish butterfly on the Godly. But we've got 85 right now being a support. Is there going to be further pressure to the downside? I think we are going to be looking at a potential move towards 82, 83. But if it goes beyond 82, 83, that's going to be the next big thing, right? Is it going to break through beyond that level? I think we projected further move potentially towards 82, 83 as a key support range for oil. I didn't go on this short, but some of you went on that short, yeah. So we've got 83 as the key number to watch out for on oil. That's where it's likely going to pivot around if it does get pressured lower. Obviously the key trigger would be 85. If you're planning to go in short on oil on the hourly time frame, make sure it does break below 85. That's simple as that. We might see that move towards below 85 tonight. In terms of oil, we might be able to see this new extension here. We could potentially see market push down towards 83.50. 84.25 to 83.50. That's where the 127.2 and 161.8%. It's still within the range. Still within a projected range of support around 83. So WTI, I think we are potentially be looking at further weakness on WTI. If you have that short on WTI, I think it's okay for you to have that short on WTI. Just make sure your stop loss is above that 87.75 level here, which is that. Is it too close, too early? Yeah, I would have your stop loss at about 88 if you're going to be targeting 83.50 here. All right, just keep a close eye on this one. Most of you probably got in on a much higher entry. You guys probably got in at around 89, 90 level on the short on the WTI. But yeah, in terms of potential target movement, look for potential bounce, potential support to come in around 83.50, 84. All right, next up, I don't think there's nothing much to look on gold, right? I'll bring out gold. Nothing's gonna happen with gold. We're just within range here. Nothing fancy, nothing new. We're not really trending to the downside or anything like that. If you have been short on gold, maybe you want to get out that gold position. I don't know, because we do have a strong support right now building up. We are going to be looking at this range low for potential support. That's basically July low. So you got all the way down until 1680, but you really want to be focusing around 1695. But that's my thought on gold. So if someone says, yeah, it's time to go nuts on gold right now, I don't think it's time to go nuts on anything right now. I think it's time to take your profit and be on the sideline until the ECB is done. So yeah, I'm not pro on going short gold. Okay. All right, crypto. We talk about crypto, right? I said it wasn't cheap enough. So here we are. Crypto is still not cheap enough. In terms of how far it can go, that's all done and projected with. I'm potentially looking for a further move towards 18,000. We broke below 19,500 easily, so yeah, no surprise there, no big deal. So I'm not a fan of crypto right now. I'm not really looking at picking up crypto right now. I would say, let the market crash, whatever, let it burn, right? It'll scare away all the all the non-serious crypto traders, whatever, right? It'll clear off the market. The market will just correct itself. This is just clearing out the hype. I don't think it's time for you to take a position on crypto. You want to go short on crypto, feel free, but I think this is a little bit overextended. How far can you go on crypto without taking a risk, right? If you take a look at the daily time frame, just take a look at these 3 key levels here. You got 20,000, 19,500, blah, blah, blah. Basically, if you do go short right now, you need to have your stop loss there, which is like $700 or $1,200, right? You want to go long? Hey, be my guest. Everyone has a different view on this one. I'm just saying this is not cheap enough. But if you do want to go long on this one, hey, maybe you want to have your stop loss at 18,000. You think this is a great deal. You want to see price bounce back up to 20,000. Could it happen? I don't know. It could potentially happen. This is crypto, but I'm just saying it's not cheap enough. It's not cheap enough for me to trigger any buys on any crypto. It's too far down for me to be shorting crypto. That's what I'm trying to say. I just don't like shorting crypto. So simple as that. Albert, what do you want me to recap? You want me to recap the whole thing? That's going to be tough, man. Oh man, I got GOAT now. Good. Nah, no. Okay, if you jump in on the Telegram channel, then just keep in touch. I normally post an update on Tuesday, Thursday, Friday. If there's a key event, I'll post stuff on Monday and Wednesday as well. But we do have a webinar specific to that Telegram channel on Monday. So if you want to jump in on that one, jump in. It's going to be in and it's not going to be in English, but I mean, if you do ask questions in English, and I'll be more than happy to answer that for you. In terms of what I post, I normally post in English and Bahasa, so it's bilingual. So yeah, good one. So again, I hope you guys had a fantastic week. Hope you guys had a great one. What I'm trying to get the message through is just don't overstay, because I've been getting a lot of questions from yesterday that, hey, you got out too early, maybe you should stay for another 200 pips. Yeah, it doesn't work that way. I got my target and whatever, be happy with it. All right, just quickly before we break away for tonight, let's take a look at the US 30s futures. So futures, let me just give you a little bit of a warning on futures here. It's kind of slowing down a little bit, yeah, if you take a look at it from the daily perspective. We are still going to go by this fib here. Take a look at where it's bouncing off. It's actually at around 78.6%. So yeah, again, key level 31,000. So I'm not basing it on nothing. We are looking at key support coming in, key resistance coming in. Market could get it the wrong way. The market could go turn around today and everyone just say, hey, it's done. Yeah, USD is down again, blah blah blah. What I'm trying to say is don't buy into it, right? It's tough to go against the US dollar right now. It's just that logic there. US 30 is looking great. I think we might see potential bounce intraday. I think pre-market, I don't know what's going to happen, right? But I mean, pre-market on the early time frame doesn't look great. Still pointing to the downside. We might see market push down below 31,000 a little bit here. If you go by this fib here, it'll be this fib. All right, we've got that, and then we also have the older fib, which is this one. Overlapping 127.2 and 161.8% at around 30,900. Simple. Done. Right, so we could see market push down towards 30,900, maybe break down below 31,000 a little bit and then bounce back up. Hey, I don't know. I'll be keeping an eye out on Apple tonight. We've got new iPhones coming out tonight, so yeah, I'll be keeping an eye out on the market as well. But that and the Nasdaq 100 here, again, we are seeing signs of slowing down on the Nasdaq here. Again, if you take a look at where the market is bouncing off from, we are looking at about I believe it's going to be 12,000, but just to be sure. All right, so about 12,000 here. We are on the daily. We are below the Ichimoku cloud, but if we see that happen when the initial break happened, typically we see market move back to test that before we actually break it. But we now have a key level to watch out for. It's actually 12,000. So if you take a look at it on the hourly time frame, it's kind of pivoting around 12,000. We might see market push down a little bit because there's this fib over here. But again, I'm pretty sure there's two fib that's likely going to overlap. Pretty sure they're going to overlap. Yeah. The 161.8%, 78.6% overlaps at around 11,925. 11925. So yeah, I mean, if you round it down, it's going to be about 11900. Okay, so those are your two potential support here on the Nasdaq here. We might see market go back up, as I said, because we might see the retest of that, Ichimoku cloud. We are below the Ichimoku cloud. So again, if this confuses you, get rid of stochastic. Simple as that. You want to see you want to wait for a potential sell on this one. Hey, you got your support trend line here. So all there. There we go. So yeah, you got your support trend line. You want to wait for that breakout. Could it become a flag or anything like that? Yeah, by all means, if it does break the support trend line, then we are going to be looking for that run lower. So here's a potential scenario. If it does break below that 61.8% on the current fib, have your stop loss just slightly up there above 12,000, then you could be targeting 11,900. Risk reward ratio wouldn't be that great. So again, it's really up to you on this one. Is it time for the stock market to recover? Probably not. So yeah, I think there was one more question about when the FOMC is gonna hike again past September. It's going to be October. Okay. I've done ideas on Aussie USD, so if you want to review Aussie USD, feel free to review that. Other than that, it's I think it's a wrap for tonight. Good luck with the trades, and I'll see you Friday. We've got divergence in English on Friday. So yeah, I mean, if you are wondering what we're talking about in terms of potential end towards in a trend and stuff like that, or continuation, yeah, jump in on divergence session on Friday. Okay. All right, guys. Have a great one, and I'll see you soon.